You are listening to the Wax, Polish Real Estate Podcast.
All right, so we're diving deep into the Canadian housing market today. Specifically, we're going to unpack those rate cuts that everyone's been talking about.
Yeah, it's like seeing that sale sign go up and you're wondering, should I jump in now or wait for an even better deal?
Exactly. And that's what we're here to figure out, right? We're going to look at what these rate cuts actually mean for the market, both now and down the line.
And that's where understanding the bigger picture comes in. So you've got the Bank of Canada. They're the ones calling the shots on interest rates, basically what banks end up charging you for loans. And they recently decided to make a move. They lowered their key interest rate. We call this a rate cut.
Okay, a rate cut. And just how much did they shave off this time?
This time around, it was by 25 basis points, bringing the rate down to 4.25%.
Basis points. Now, for those of us who, don't have economics degrees, what does that translate to in real-world terms?
You got it. It's easy to get tripped up by financial jargon. Basically, think of a basis point as a tiny little fraction of a percent. So 100 basis points, that makes up a full percentage point.
Right, okay.
So when we say a 25 basis point cut, we're really talking about a 0.25% decrease.
Gotcha. So a small cut, but hey, every little bit counts. Right. I bet people were expecting fireworks, though, with all this talk about rate cuts.
Absolutely. It's natural to think, rate cut. Sweet, houses are going to be way cheaper now.
Mm-hmm.
But unfortunately, the economy doesn't quite work that way. It's not an instant thing.
Oh, so it's not as simple as flipping a switch?
Not quite. The best way I can explain it is to imagine a long line of dominoes. You tip over that first domino, but it takes a while for that ripple effect to reach the very last one.
Right.
And that's what's happening here. We're still feeling the impact of those 10 rate hikes from the past couple of years.
Mm-hmm.
This recent cut, it's like that very first domino tip. A move in the right direction for sure, but it needs time to really ripple through.
Okay, so patience is key for all those eager home buyers out there. But are we talking about more dominoes falling? Like, are economists predicting more rate cuts coming down the pipeline?
They are. There's definitely talk of further drops. Some are even suggesting we could see rates down to 3% or even lower in 2025. Now, that's when we could start to see a more noticeable shift in affordability. Those sale signs might start to look a whole lot more tempting.
So, okay, lower rates are on the horizon. But while we're waiting for those dominoes to fall, how does this actually play out in the real world? I mean, we're talking about people buying homes, right? Actual houses, actual dollars.
We got to bring those dominoes closer to home. Right?
Exactly.
Remember we were talking about that RBC senior mortgage specialist, Scott Lilly?
Yeah.
He gave this presentation, I think it was to a bunch of C21 realtors, and he had this really interesting example about fixed-rate mortgages.
Okay, fixed-rate mortgages, so that's where your interest rate stays the same for, like, a set period.
Exactly. So picture this, September 2023 versus September 2024. What happened was the lowest fixed rate being offered, it dropped. And when that happens, something called the qualifying rate also goes down.
The qualifying rate, now remind me again what that is.
Right. So the qualifying rate, it's basically the rate that lenders use to make sure that you can still afford your mortgage payments even if interest rates go up. Kind of like a safety net for the bank.
Okay, right.
So when that qualifying rate dropped in September 2024, buyers suddenly qualified for larger mortgages than they did a year earlier when rates were higher.
Oh, I see. So bigger mortgage, bigger house. I'm starting to connect the dots here.
And get this, because of that drop in the qualifying rate, those buyers could suddenly afford a house that was a whopping $123,000 more expensive.
Wait, $123,000 just from that qualifying rate going down?
Yep.
That's wild. So someone who might have been priced out last September, now they're back in the game?
Exactly. And Lilly didn't stop there. He took it even further. He started crunching the numbers, like what would happen if those fixed rates kept dropping, let's say, in increments of 40 basis points.
Okay, those basis points again, those tiny fractions of a percent. Small but mighty, it sounds like.
Right. Each little drop unlocks a pretty significant jump in how much you can afford. So, for example, at a potential future fixed rate of 3.99%, the amount you could spend on a house jumps up by $37,000 compared to, like, the previous increment.
Wow. Okay, my mind is officially blown. Those tiny drops in rates can make a huge difference.
Absolutely. It's all connected, right? Like you were saying earlier, those rate cuts are setting things in motion, but the full effect, it takes time to really play out.
So we've got this calm before the storm kind of situation in the market right now, but let's bring it home for our listeners. If you're thinking about buying a home right now, what does all of this actually mean? Should you hit the pause button, wait for those rates to bottom out, or is there a different strategy altogether?
That is the million-dollar question, isn't it? And the tricky thing is, there's no one right answer. It really depends on your individual circumstances, your risk tolerance, what your goals are.
Okay, no crystal ball, got it. But what are some things people should be thinking about as they're weighing their options?
Well, one thing to consider is that while lower rates could mean more purchasing power, you might also be up against more competition from other buyers. Supply and demand, right?
Ugh.
The classic tug of war.
Mhm.
More buyers all vying for their dream homes. So it's not just about snagging a lower rate, but also being strategic in what could be a much more competitive market.
Exactly. That's why staying informed is so important. Keep your finger on the pulse of those rate trends, but also really pay attention to what's happening in your local market. Are houses sitting on the market for longer? Are bidding wars cooling down? Those are all clues that can help you make a more informed decision.
So knowledge is power, as they say. And speaking of knowledge, I think we've covered a ton of ground in this deep dive. We've unpacked the Bank of Canada's rate cuts, we've demystified some of those financial terms that can make your head spin, and we've really explored the potential ripple effects on the housing market, both in the short term and further down the line. Yeah, we talked about those dominoes. And we also touched on how important it is to really understand your own personal financial situation, your risk tolerance, and what you're looking for in a home.
Exactly. This deep dive was all about giving you the information and the insights you need to navigate the Canadian housing market, especially with all these rate cut dominoes starting to fall. And while we can't predict the future,
Right.
we can certainly arm ourselves with the knowledge to make smart, informed decisions. So keep those eyes peeled for those opportunities. You never know what the future holds.